Hello, this is Wes Bridle, and this is Kingdom Calling's first economic update since the Coming Storm video was shot in November 2009, and we're shooting this video to update you on what's going on. That was shot at a point in time, and obviously a lot's happening. If you haven't seen that video, I really recommend that you go and watch it. If you're seeing this from the newsletter or from the blog, there should be a link there to take you to watch it for free. If you're seeing it somewhere else, there should be a link in our bio also pointing you there where you can go watch that video for free. That will give you a lot more context about the things that we're talking about here and about the situation that our economy is facing. Once you have, you'll see that many of the things I'm about to talk about are actually coming true from what we said would happen in November. We're still early stages. We haven't seen anything ugly yet, but there's a lot more signs happening. So we're going to run through those news items. If you go to my Twitter feed at Wes Bridle, WESBRIDEL, you'll see many more articles. I spend probably over an hour a day reading all of those articles, and my guess is most of you don't. So I'm encapsulating the big picture things in these economic updates, and we do plan to do these periodically to keep you informed. Afterwards, after going through the news items, I'm going to just talk about what does that mean and give you an idea of what I think is coming. And that one last thing, we have a couple symposiums coming up. The next one is February 16th. All these will be in Austin, Texas, and that's Tuesday, February 16th, on the Gospel of the Kingdom. That's going to be a foundational message for the spiritual symposiums that we're going to have going forward. So that would be a really good one to make. And on March 16th, also a Tuesday, we're going to talk about how to be a better investor in this coming economic environment that we're in. So let me jump into the news. Sales of existing homes fell in December by 17%, and even a third of those that were sold were distressed sales, so not good numbers. The guy who shuts down the banks for the FDIC recently said that 2010 is going to be a big year for bank shutdowns, so not good in that area. The Treasury Department hired a guy to analyze what the government is doing as far as their fiscal and monetary policy, and he just came back this Sunday and reported to Congress that what they're doing, the things the government is doing are not working. In fact, they're going to lead to bigger problems. So that's the Treasury's own person that just reported that this Sunday. This is also a big news. The SEC voted recently that money market redemptions can be stopped in times of difficulty. So that's a scary thing. If you have money market, I would not consider that a safe money vehicle. They can decide not to give you that money for a time if they're under stress. Also, in the last few weeks, the proof has come out that the Federal Reserve was doing some funny business with our tax dollars in order to bail out Goldman Sachs and other people like that. The proof is that they were hiding things from Congress, hiding things from the American people in how they spent our money. So this is a scary thing about what's going on in Washington and in New York. The GDP number from the Coming Storm video, we talked about 3.5%. That number had just come out. It's now been revised down to 2.2%. Well, now, this last week, everyone's excited about the big GDP number that comes out. Again, first of all, you'd expect it, as much money as they're printing and borrowing, that would slosh around in the economy. But even those numbers they're reporting end up getting revised way down. 26 states, soon to be 34, according to a recent study, are now going to the federal government in order to get money to pay their unemployment claims. They're insolvent. So that's a scary thing. More than half the states need the federal government to bail them out. The FDIC, we talked about this coming. They're now short $8 billion, and so they're going to be soon going to the government for more money there. The so-called natural disasters, you're noticing more of those. I said there would be many non-economic things happening. Jim Rogers, recently, legendary investor Jim Rogers says the world will soon face food shortages. The inventories are now at the lowest level they've been in decades, not in years. Sometime in the next few years, we're going to have very serious shortages of food everywhere in the world, and prices are going to go through the roof. He also mentioned in oil. Over the next decade or so, oil is going to go much higher because known reserves of oil are declining at a very rapid rate. France recently called for a new Bretton Woods. Sarkozy, as the president of France, renewed his attacks on monetary manipulations in general and the supremacy of the dollar in particular. It cannot be that we have a multipolar world and a single world currency. We need a new Bretton Woods. Mr. Sarkozy also repeated that France would place the quest for a new global monetary order at the center of its agenda in its upcoming chairmanship of the Group of Eight next year. We will not allow monetary dumping. This is a very serious thing. They're leading the Group of Eight biggest, most powerful countries in the world, and they're going to get rid of the dollar. This is a huge warning sign. We mentioned in the Coming Storm video many other countries calling for this, but now we're talking about the head of the G8 next year calling for it. Now, there's a whistleblower within the International Energy Agency who stated that the fear of triggering panic buying has caused them to intentionally underplay the inevitable shortage. So someone within the IAE came out and said that the world body is hiding the fact that we're running out of oil so that we don't panic. You need to be aware of this. It's food and oil. These are major things to life, and we're running short on them. There is also major oil companies quoted in this article agreeing with that fact. This is a pretty serious thing. Fitch Rating Agency warns that the U.S. must cut spending and raise taxes to cut its deficit to save its AAA rating. The picture is deteriorating fast enough to ring alarm bells. Fitch expects the combined state and federal debt to reach 94% of GDP next year, up from 57% at the end of 2007. Federal interest costs will reach 13% of revenues, meaning that an eighth of all taxes will go to service debt. Most fiscal experts view this level as dangerously close to the point of no return. He also talked about the potential interest rate shocks because our average debt maturity is now only 4 years compared to 7 in Europe and 10 in Britain. The share of 3-month bills has risen very sharply. So we talked about this before, but if interest rates rise, we will feel that very quickly. And it talks about the fact that Chinese, Japanese, and Mideast investors own most of our debt, and they could quickly move if they change their mind about what they feel about the dollar. The very serious thing. If Fitch were to just change our rating, I mean that does it right there. We've always been considered the safest place to lend money to, and now one of the major rating agencies says that we're not so safe as we used to be. I want to quote Ludwig von Mises, probably the greatest economist ever, and he's been dead for a while now. But he said, "There's no means of avoiding the final collapse of a boom brought about by credit expansion. The alternate is only whether the crisis should come sooner as a result of voluntary abandonment of further credit expansion, or later as a final and total catastrophe of the currency system involved." That's the situation we're in. We've already kind of gone way past the sooner part, but the only thing that our politicians right now are trying to do is to prolong this thing. Many of them probably don't understand, but we've been running a pyramid scheme. There's no new money to be lent to us as we've been doing. We're talking about Obama's new budget here this week. It talks about $9 trillion of new debt over the next decade. Those numbers are always conservative to reality. But even if it was accurate, $9 trillion, there's not an extra $9 trillion to be lent to us out there. This is going to be a major problem. Market predictions, again, the Coming Storm video is a much better, longer analysis. But my best guess is maybe in March we're going to see deflationary crash in all markets, so prices going down everywhere. And I think later this year we're probably going to start to feel the pain of some of these deeper problems, not just account balances going, but starting to feel these things in our lives. If you have any questions, please feel free to give me an email, wes@kingdomcalling.com. And to continue to see these updates, please just get on the newsletter at kingdomcalling.com, and we'll make sure and get these to you. And we'd love to have you at the symposium if you're going to be in Austin on February 16th or March 16th. Thanks, and God bless you.